I'm Matt Pichard with NAREIT's REIT.com. Here at the Marriott Marquis in Washington, D.C. for the 2016 NAREIT REITWise Law, Accounting, and Finance Conference. Joining me is Ann Canfield, the president of Canfield Associates. Ann, thanks so much for joining us today.
Thank you for inviting me.
Now, can you start by telling us a little bit about your firm?
Yes, Canfield Associates is a consulting firm, and we do some lobbying, but we do most of our work in the regulatory arena, routinely filing 100-page comment letters, as we like to say. As part of my firm, though, we run a trade association of national mortgage lenders and servicers called the Consumer Mortgage Coalition, and so that's really the client for whom we do a lot of the regulatory work. And then separately, we have an affiliated company, Canfield Press, and we publish specialized financial publications out of that company.
Now, here at REITWise, you participated on a panel on housing finance. With the increased regulations and scrutiny that's facing the primary market, how do you see that impacting the ability for companies to get business done from a volume, cost, quality perspective?
It's been a very challenging environment. The new regulations that are still coming out of the Dodd-Frank Act are at times very overly prescriptive in our view, very complicated, not always clear, and very costly. And so, for example, the new truth in lending disclosure regulations, the new regulations impacting mortgage origination disclosures, I think it would be fair to say that the industry spent, it had to be in the billions of dollars to implement that. The regulation has many challenges in it. It's not particularly well written, and as a result, lenders have started to take products off the market because the forms don't, allow you to be able to comply with the law easily, and the liability is enormous. So, as a result, it's a very challenging time for the industry, very costly.
And what impact do you see private label securities having on the marketplace?
Well, there haven't been too many private label securities ever since the financial crisis hit, and that's in part due to a number of the regulations. So it's really, unless you're talking about resecuritizations or something, that's where all of the private label security business has been done. But really, when you're talking about the primary market, it's Fannie, Freddie, Ginnie Mae, business that's getting done in the marketplace today.
Lastly, you can't talk about housing finance without looking at the potential for GSE reform. What are your expectations for possible reform?
Any kind of housing finance reform is going to have to deal with the reality that that revenue that's been being sent over to Treasury is now not going to be there to reduce the deficit. So it's going to make those numbers alone, the budgetary impact of those changes will make it very difficult, along with just getting everybody to agreement on a structure. That said, the industry, I think, is moving forward. They formed task forces. There's been an enormous amount of analysis done. There's a variety of options out there for reform, but I think consensus is coming around to either a utility type structure, well, along the lines of a Ginnie Mae type structure that would be a government corporation, or a mutual insurance company structure, much like a Build America mutual corporation structure.
Great, Ann, thank you so much for joining us.
All right, thanks for having me.
For more from REITWise 2016, be sure to visit REIT.com.